Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the market commentary for the week ending July 21, 2017. Fairly interesting week. In some regards, a typical summer July weather market, if you would, based on every 6 hours getting new forecasts and the market gyrations thereafter. So we've seen some pretty good short-term volatility in the market this week. Long-term we haven't. For the week, corn closed up about 4 cents. Beans are up 20 cents for the week. Wheat down 12 cents in Chicago wheat. Now, interestingly enough, we talked, as I mentioned, volatility, but if you compare it historically, we have very little volatility, so at least so far in this growing season. Looking at the last 4 years on December corn, so 2013 through 2016, the average trading range during the growing season, which put down 1st of May till the end of August, the last 4 years, that's average $1.30 on December corn futures. So far this year, our trading range is a whopping 40 cents, and most of that came in over a 10-day time frame here a couple weeks ago. Soybeans a little different. Over that same time frame, November beans have almost a $2 trading range average. This year we're at $1.30, so beans have had a bigger trading range and closer to the average, but yet still well under the average. Commitment to traders report this afternoon. Rough numbers look like corn. Traders still long about 100,000 contracts. I think that may surprise some, as they were hoping or thinking that number may be closer to even. Beans, funds are still long about 50,000 contracts, and wheat 35,000. We basically have about 6 weeks left in the current marketing year. It ends Sep 1 and not that much longer till harvest. So keep in mind, in many parts of the Midwest, and you can see this by the carryout numbers, there's a tremendous amount of old crop, especially corn, that needs to move, presumably off the country. During the recent rally in the early part of the month, we've seen pretty good movement during that window, but there's a lot more from a percentage standpoint that still needs to go. That is what's keeping this basis historically wide right now, and it's hard to believe we're going to see that basis really improve much in the next 6 to 8 weeks, especially considering corn anyway. An export trade right now that we're not competitive in the world market with the southern hemisphere, at least for the balance of the summer and the first part of the harvest time frame into the balance of 2017. So keep that in mind. A lot of old crop corn to move. On the next thing to keep in mind from a producer standpoint, certainly look at some hedges on this new crop, have some offers in place, look at some options. It's not common, it happens, but it's not real common for the markets to rally much in late July and August. It can. 2010 is a good example, but historically it doesn't happen that often. So be looking at opportunities to get some additional new crop sold. In many cases, what we feel like we're seeing is the farmer is spending a lot of energy on trying to market the old crop and very little on the new crop. And yes, there's opportunities on that new crop from a seasonal standpoint. So moving forward, weather forecasts are going to be key every Sunday night, Monday night, like this coming weekend, and then forecast there forward. August 10th is the next supply and demand update, and that's also the first date the USDA puts out actual yield counts from the field. So the market will have a lot of numbers in anticipation of that report. So moving forward, weather is going to continue to be the key in this market until we get a better feel or better idea on the debate of what ultimately the yield may be and the impact that has on the carryout. That'll be interesting to watch, and it'll be a talking point from now through the middle of at least through the middle of August. Cattle on feed reports this afternoon for the month of June. On feed was 103%, pretty much in line with what the trade was looking for. Placement number was a whopping 116%, which is 10% higher than what the trade was anticipating. It's deemed to be pretty bearish. The cattle market come Monday morning when we reopen in marketing's at 103. Trade was looking for 105. So if you have any other questions about the markets, feel free to call us at BIS Commodities. Phone number is 800-373-2525. Our website is biscommodities.com, and those of you that are customers, we're in the process in the next month of moving to new office space. We will update you on the address and when we move to those new facilities, which we're looking forward to. Again, this is Clark Neighbors, BIS Commodities, and we hope everyone has a very nice and cool weekend.